Okay, let's be real. The stock market for most is one giant emotional roller coaster. 1 minute it's booming, the next, Trump drops tariffs and everything tanks. Everyone's panicking, but not us. We bought. Why? Because the real signal came before the headlines. And if you knew where to look, you saw it coming. I'll show you exactly how we spotted the April bounce before the media caught on and why this move still isn't over. And I'll show you the one setup that's unfolding right now and why it could be even bigger. Okay, so let's rewind to early April. President Trump announces new tariffs. Market drops faster than a crypto meme coin. Volatility spikes, sentiment flips, retail investors bail. But us, we didn't react. We followed our system because weeks before the news even hit, our trend following framework flagged a key support zone when the market pulled back. It kissed this level and bounced hard. This wasn't luck, this wasn't random, this was structure. And that bounce, that was the signal most investors missed. Now, fast forward, Wall Street insiders were already leaning bullish before the public knew anything. Wall Street heavyweight Tom Lee from Fundstrat drops his latest market outlook. And he doesn't just say things are okay, he outright said bullish. Here's what he said and why it matters. Tom doesn't see this April drop as a trend reversal. He calls it a flush. In plain English, temporary fear, not a permanent crash. And that's important because while retail investors were waiting for permission to act, the pros were already buying, which matches perfectly with what we saw on the charts. Institutional money stepped in right at support. That's not panic, that's precision. According to Lee, stocks haven't topped. He sees significant room to run, especially as big money starts rotating back in. And well, that's exactly what we were seeing on a technical level. Price holding above key moving averages, for example, volume coming in on green days, leaving stocks breaking out of consolidation and setting record highs. This isn't weakness or crash territory. In fact, far from it. This is strength in disguise. And here's where it gets really spicy. Lee says the market's current setup is better now than before the tariff chaos. And why is that? Well, that's because the weak hands have been shaken out. The fearful have exited, but the trend has held. Ultimately, Lee is saying what we saw by simply looking at the chart and understanding market structure. It's a pattern we've seen time and time again. Sharp correction, fast recovery, big move. That's not randomness, that's rhythm. Even now, most retail investors are still sitting on the sidelines, nervously waiting for these things to feel safe. But here's the truth. Markets climb walls of worry. When prices rise while sentiment stays cautious, that's often the early stage of a major rally. And when the crowd finally piles back in, well, it's often too late. They buy the top, then get whacked on the reversal and swear off investing once again. You see, you need a system. And despite the headlines, Lee points out something most miss. The data's not deteriorating. In fact, it's stabilizing, which sets the stage for trend followers like us to ride the next leg up, further compounding our profits. While the news chasers, well, they stay frozen. Here's the play-by-play. Market drops, hits support, bounces, holds structure, and we're off. Precisely what Tom Lee confirmed. This is why we don't follow headlines. They are loaded with opinions that will have you on the wrong side of the market. Few analysts really speak any sense. What we do here is we follow the market structure. The brutal truth that no one tells you, if you're waiting for permission from the media, you're already late. If you're waiting for the fear to pass, the opportunity has gone. If you're trading off tweets and gut feelings, well, you're going to be toast. Most investors lose because they react. I know because I've been there too, watching the market tank, hand hovering over the sell button, hoping I'm not making a mistake, But once I started trusting structure, not headlines, that panic completely disappeared. Our members win because they follow structure. People love to say, well, you just got lucky. And trend following doesn't work. That's a personal favorite. Yeah, but this market is different. Look, after over a decade in this game, running a hedge fund in Luxembourg, helping hundreds of professionals go from floundering to flourishing, I'll say it clearly. This isn't luck. It's structure. It's a system. It's discipline. Now, let me show you how most investors unknowingly sabotage their gains every single time. Here's what you need to understand if you're serious about growing your portfolio. The media will always give you a reason to panic, but structure tells the real story. You don't need to time the market perfectly. You just need a rules-based system that keeps you in when the trend is up and gets you out when it's not. Markets move in patterns, breakout, pullbacks, resets. These are repeatable, but only if you know how to read them. Volatility isn't danger, it's data. If you have structure, volatility becomes your friend, particularly directional volatility. You don't need to win every single trade. You just need to be in when the big moves happen. That's what drives the compounding effect. Emotion is the #1 portfolio killer. A system removes emotions. It gives you confidence when others are scared and keeps you patient when others get greedy. Compound growth isn't about hero trades. It's about stacking high probability trades over time. Every professional uses a system. So why wouldn't you? Tom Lee sees upside. Our system shows upside. The market confirms it. Yet most investors still sitting, still hesitating. I repeat that you cannot rely on headlines or emotions to grow your portfolio. If you're waiting for the media to tell you it's safe, you're already behind. Look, knowing the theory is one thing. Put it into practice, well, that's a whole different ballgame. That's why I made a full breakdown of the exact system I use every single week in this next video. The same one that's helped me generate over 30% a year and has helped me stay grounded and profitable even during pullbacks like the most recent market decline.